find high probability setup using the AQZ and specifically the prophetic candle. If I open up a chart like this, all right, if I open up a chart, spread that was on GA, but let me open up GA itself here. So if you have a chart like this in front of you, the first thing that hits your mind is confusion, right? Left to me, if you are new to trading, this looks very, very haphazard, right? Price went up, down, then later on started coming down, and you think it will go down the more, then it broke, and now it looks like it's coming down. Is it going up? Is it coming down? A big problem. And for traders, we only make money if we're able to predict correctly the direction of price for most of the time, not all of the time, at least most of the time. So how can we find symmetry in all of this seeming, haphazardness in the market? How can we find symmetry in doing that? I'll be speaking basically on two things today, and they're all centered around AQZ related stuff. And again, when we talk about AQZ, we're talking about supply and demand. We're talking about order blocks in a bigger and deeper way, but simplified. So last week I explained the concept of taking out liquidities and looking for prophetic candles at the fringe, not prophetic candle that just appears basically anywhere on the chart. You want it to be at the peak or at the fringe. And there are times you find two or more prophetic candles, let me use red, appearing almost in close proximity to each other in terms of height. I said you should look for the one at the peak, use that as your main reference. Once a while, price will not get there and pull back, but you're reducing your odds of losing. Then we went ahead to say you want to look at the weekly highs and lows. So, and I went through, can anybody just mention the name of any pair so that it doesn't look like we're cherry picking? Any pair of your choice, and let's look at the chart together.
Silver.
Silver. All right. I don't trade silver, but we'll have it up. XAG USD silver. All right. So here we have silver. And the concept we're trying to explain is taking liquidities and then dropping. So we'll start from this week, for instance. This was the high of this week. Notice how price took it and then dropped down. This was the high of this week. Notice how price took it and then dropped down. This was the low of this week. Notice how price took it and then pushed up. Price didn't really contest the high there. But again, this happened to be the low of this week. Notice how price picked it up and then pushed up. This happened to be the high of this week. Notice how price picked it up and then pushed down. This happened to be the low of this week. Notice how price picked it up and then pushed up. I don't know if I think I can stop here, right? This happened to be the low of this week. It doesn't happen every week. But of course, same thing with anything good, it doesn't happen all of the time. You need to seek it out, which is why it's difficult, right? So that was the low of this particular week. Price nipped it up and then pushed up. This happened to be high of this week. Price took it out and then melted powerfully, right? And you could see that over and over happening again, not all of the time, but you're looking for high probability setups is our task and our duty to spot them out. This was the high of the previous week. Price took it out and then melted. This was the low of the previous week. Price took it out and then pushed. This happened to be the high of this week. Price took it out and melted. All right, so you're looking for high probability setups. This is one way you could find them, not all of the time, but it pretty much works. Price took this out and then pushed up. Price took out that high and then melted. Price came all the way down, took out this low, right? So one easy way is you look at 1 week back, right? But in practice, I look at 2 to 3 weeks back. Sometimes price can go take out the high of 2 or 3 weeks back, especially if the highs are not too far apart. So let's say if you're trading GU, the high of 3 weeks ago compared to the high of this week might just be 50 pips apart. So price will go out, take out the high of last week, the high of 2 weeks ago, and then melt down. Thankfully, we have the prophetic candle. You usually have a prophetic candle around those times. So it helps us trade reversals. If you like trading reversals, that would be one way to spot them, right? So we had some very good examples. I think it was Ifraz that gave us a way of spotting this out on TradingView. So have one small indicator here, previous weekly highs and lows. Since AQZ is blue, I decided to use something blue so it doesn't look too different from what we're used to. Again, let's go to the pairs this week and see how it played out. So basically, I traded AUD card yesterday. Once I saw this, I posted this signal on SimplyPips and the AQZ group. So this line delineates the high of last week. Price took it out, gave us a H4 PC. So now we're looking for confluence. You're looking for high probability setups. You're looking for reasons to take your trade beyond just when I finish. Let me finish my meeting, right? So looking for reasons to take your trade beyond just having a PC. The PC simplifies when we should go in for the trade, but you can also merge it with runs on liquidity. So here, this line delineates the high of the previous week, and then price took it out, played around. Of course, they'll accumulate for a while, gave us our breakout, our retest, and then price dropped. Again, if we were to look at this under AQZ terms, we will be having TP 1, 2, 3 hit, right? Again, if you come in at the tip of the AQZ block, then your TPs will be the middle lines, the support and resistance lines, right? If you're coming in at the preferred entry, then the aqua zones levels A1, A2 will be your TPs. If you're coming in at the entrance or the tip, in this case, the bottom of the AQZ block, then those black lines in between becomes your TP, right? We want our TP to be equidistant such that we have an asymmetrical risk-reward ratio. So if I'm entering from this point, I should be targeting this as my TP1 and this as my TP2 and this as my TP3. Whereas if I'm entering from my preferred entry, then I have this as TP1, this as TP2, and like that, right? So this pretty much played out. It was a switch trade. Again, even if you didn't use the weekly highs and lows, you still would have taken this trade off the H4 PC, but this was pretty much, gave you a high probability setup, right? Let's dwell a little on this pair and see how many times this would have played out. So 2 weeks ago, or in fact, just last week, this again took out the low of the previous week. This was the low of the previous week. Now, you need to know here that it superimposes the high and low of the previous week into the new week, right? So if you see this low, it simply tells you this was the low of the previous week, which happens to be this. right? Sorry, let me take out this, which happens to be, so it superimposes that here. That was the low of the previous week. Price pretty much came, took out that, and then went the other way around. So when we have our H4 PC here, we basically would have filled our H4 PC to the downside, anticipate an invalidation, a retest of our preferred entry, and then we'll continue our move to the upside. Just a way of helping you find high probability setup. Alone. All right. So here we have our breakout. Here we have our test of the preferred entry, and then price melts away. So for the last 4 weeks back to back, we would have had interesting trades on AC if we simply look at this concept of trading, right? 4 weeks back to back. Here again, we had a NIP, took out the low of the previous week, gave us an AQZ qualifying candle, which is an inside bar. And you know how we trade an inside bar. You know how we trade an inside bar. We fib it. Again, let me get out this magnet. Fib. And for an inside bar like this, we would be looking for a breakout. So we had a breakout. Unfortunately, we never had a retest, and price went. It happens once in a while. You do the hard work, and price will not just give you a reason to go. So here again, it took out the low of the previous week. And after taking out the low of the previous week, we would be watching out for signs of reversals. The first sign we would have seen, we saw this bearish engulfing, which is not a sign of reversal. It's telling us price will still continue to go. But traditionally, when we see a bearish engulfing, we would mark up the bearish engulfing and anticipate a violation, right? But if the violation does not occur, then we'll begin to wait for another AQZ qualifying candlestick pattern. And we find one here, which happens to be an inside bar. So our attention will shift to the inside bar, which is the latest AQZ qualifying candle. This is the breakout, this is the retest, and that is the rally. Again, a switch trade, right? So basically that's AC and how we could have played it over some weeks. Again, see this, the high of the previous week, price traded into it and coincides with the previous H4 prophetic candle, right? Coinciding with the previous H4 prophetic candle. So what could this have done for us? It could have made us to be a little bit cautious about the validation and rather want to wait for the revalidation, because price basically was trading at the high of the previous week. We expect that stop hunt to be done and price would reverse. Doesn't happen all of the time, but if you have a concept in your mind and you stick to that concept long enough, you get to see it everywhere in the chart. So price traded again. Let me take out the QZ fib so you can see what I'm saying. This line here, maybe I should just, for the purpose of this class, make this white. So you can easily spot it out, white. Okay, right. So there we have the high there, and then we have the prophet telling us that I expect something to happen around here. So we had on Sunday, Monday morning, Asian session, we had that push, took out the high there, then revalidated. We came in at preferred entry, and then we sell off. We had this bullish engulfing. which is again another AQZ qualifying candle, and we would have been feeding this, right? So price came back, we would have invalidated, revalidated, invalidated, and melted away. Right, so let's continue the push. So here we see price taking out the previous week, but they didn't really go too far. So basically, that is one way you scout out for high probability trade setups. If you are used to trading view, it's very simple. Just add on your trading view, have an alert to let you know when price has breached the previous week's high and low. And you watch out for your H4 prophetic candle as a confirmation to take that trade. It doesn't have to be the H4 prophetic candle, doesn't have to happen that week. It could be an old H4 prophetic candle, and simply just pull the trigger that way. Let's go to G. There's something interesting that happened. GA. All right. So here we have GA. Something very, very interesting happened this week on GA. All right. So on GA, we had a H4 PC seated here. So if you trade the PC the way I trade it, you have this H4 PC, your AQZ block seated until you find another one. Then as price continue to go downwards, we will be focusing on the bearish candle. So on the bullish candle, I beg your pardon. In a bearish trend, the bullish candles are your friends. In a bearish trend, the bullish candles are your friend. So price basically was trading downwards. We would be focusing on the bullish candles, And when price broke above this level, so let's have our horizontal line there, or a ray. When price broke above this level, we invariably became buyers, right? Now we have an indicator on AQZ called the momentum shift, AQZ MS. So if I call up the AQZ MS right about now, you would find that the shift candle will be popping up on this candle, right? The candle that violated this last bullish candle gave us the shift, meaning there's a tendency that the momentum has shifted from bearish tendencies to bullish tendencies. I know there is momentum. So if I call up the momentum part, you would find that we will have an arrow pointing at the lowest point, right? So under normal circumstances, this is what we are supposed to feed and expect price to come into, right? So I don't like having that, makes my chart look too colorful, right? But again, if you understand the concept, you could trade with or without them. The H4 PC being the most important for me, momentum shift, you could basically see if you know what you look out for. So when price took out this high, we were invariably buyers. And how would we have caught the buy? So I took a buy from here. I think I dropped this signal in the AQZ group too for the long, right? And it traded straight up into this H4 PC, then started for the drop. So before this H4 PC, the bullish H4 PC showed up, before the bullish H4 PC showed up, how would we or could we have traded this setup, right? And that's what I'm trying to explain. So let's make this bigger for all to see and hide this out. We were bearish. We had this bullish candle, healthy one. We'll basically not consider this, it's too tiny. Looking All right, sorry about my audio. I'm not sure where I lost you guys there. All right, but basically I'm on GA, and I was trying to explain the way we could have traded this. Candle, and then price invalidated and violated both together this bearish engulfing, right? So traditionally, you would have had a fib here, waiting for price to come in here for you to take a sell. If you did, you would have caught some pips off this retest of the AQZ block, and then you might have lost some pips or might not, depending on your trading plan, but price closed above. Once price closed above, you're now waiting for a retest of your preferred entry for the long. And that was the setup that was sent. So price broke above, retested the preferred entry, and went long. Long up to what point? Up to the next H4PC, and where price dropped once, and price is still dropping. Now we have a new H4 prophetic candle. We'll basically shift this now to this level, and then we'll wait to see what price will do as price approaches this level. So the H4PC and the concept of AQZ basically helps you see price short term, take what you want to take out of the market, don't be greedy, and get out on time. Right? So again, I'll repeat one of the things I said last week. If you have, let me look for a good example. Let me look for a good example. Somebody mentioned GC. What happened with GC? If you have two or more like this, 1, 2, 3, H4 prophetic candles, 1, 2, 3, right? Close by, I would lay more emphasis on the one at the fringe, either the lowest or the topmost. I'll lay more emphasis on that one. So here I have this. Emphasis will be on this, right? That's what I'll be looking out for. And what that does is that it reduces the risk of having multiple invalidations when you're waiting for price action. You want to trade from the fringe, from outside the fringe. So let's quickly do top-down analysis. Top-down analysis. So you want to trade, let's hide weekly high and low. So you start from your monthly, for instance. Also hide this. And look for something like, someone else will give me another pair to look at. Another pair to look at, anybody? Okay, let's take a look at gold. Let's take a look at gold. We are on the monthly time frame on gold. All right, I have two people saying Euro USD. We'll take a look at Euro USD then. Okay, so like on gold, we have this candle, and this is the lowest part of that candle, and this has been violated. Right. So you basically see that on the monthly time frame, it seems like we want to have a strong USD. So that could frame your bias. From the higher time frame, you have a bias that you might be going bearish. If I were to draw my fib, I have my preferred entry at that point. I could basically just mark out my preferred entry and then begin to go lower to see how price will play when price gets to that point. So there's possibility that price could push up a little and then we see a meltdown. So that's basically how you do your top-down analysis. If you don't want your chart to be too clumsy, you could basically just drop some lines at that point and take out your fib. So when price comes into that point, it could be a black line or whatever, you know you're at a solid resistance at the weekly or at the monthly, and you should anticipate price taking a plunge from there. Euro USD. Okay, so we'll go to the higher time frame again for Euro USD and see. All right, so on Euro USD, we basically have this point that meets our criteria, and we would have fibbed like this. So this was the most recent peak before price melted away. When price returns back to this region, we would anticipate some reaction. If we had this marked up prior to this time, then it means for the last 3 months or thereabout, we possibly could have been bearish and possibility of cashing out over 600 pips on EU, right? Meanwhile, while doing that, you also need to take note of the fact that the present trend is bullish. So you are in a downtrend, but the present trend you could see clearly in front of you is bullish. And when you're in a bullish trend, the bearish candles are your friends, right? We stated that. So now this is the last bearish candle before the push to the upside. I could basically have fibbed this to the upside for a buy, if you get my drift. I could basically have fibbed this level to the upside for a buy. So I had a sell from a long-term bearish AQZ setup, and I have a buy from the short-term bullish AQZ setup. Definitely at some point in time, there had to be an invalidation or violation of one of these biases. But it simply helps me to know where I should expect some reaction from and not to be too optimistic in my sells. So even though I'm selling, I should know that in a downtrend, price does this, right? So I'm selling quite all right, but if I find a bullish AQZ fib set up for a buy, I should anticipate a pullback from that point into a bearish AQZ setup for a sell, into a bullish AQZ setup for a buy, into a bearish AQZ setup for a sell, right? You could basically work that way. So here we have a sell. Now, two things could happen here. We could have the continuation of this buy, for which case we'll have a violation of this preferred entry, or we could have a continuation of the sell, for which case we'll have a violation of this preferred entry, right? So when in doubt, you simply sit on your hands and wait, but you know what to do when price gets to those key zones. Those key zones on your chart, you have them marked up and wait for price to approach those zones. So this is the way we could have played EU down to the weekly time frame, down to the daily time frame. You have that zone and you're watching out for it. You know price could make a U-turn from here. You know price could make a U-turn from this level, right? So you're waiting, you're either waiting for price to actually make a U-turn or price to violate. Remember, if you are looking at invalidation, invalidation must occur in the same time frame upon which you have spotted your AQZ qualifying candles. So like in this case, we have what we call an inside bar. We have a violation of that. Unfortunately, we never got an entry off of the daily. Let's see what would have happened on the H4. On the H4, fine. So on the H4, we had two AQZ PC, H4 PCs telling us to go long. So we had this one telling us to go long, clean retest and a run. Then we had this AQZ qualifying candle again. Price came in to retest it, giving us another bullish candle. So we would have had opportunity to take these buys if we only had marked up from the monthly or weekly time frame and simply just set an alert there and wait for price to return. Whenever price returns, we wait to see what price will do. That might mean we might lose one or two trades, but we'll eventually catch the runner that will give us what we want. It could be difficult trying to trade within two higher time frame, even lower time frame AQZ zones, because now you are bullish at one point and bearish at the other. But if you know how to cut your losses, wait for the direction to have taken place. In the case for a buy, when price gets into this region, you simply harvest your profits and wait. If price rejects, sorry, just a minute, please. All right, I'm back. So the challenge most times is traders want to be sure of what price will do. And I have a simple analogy I use for that. And if you're a football fan, soccer, I mean, not the US football, and you have Chelsea play against Arsenal, well, is Arsenal still a club to contest with? If Chelsea is playing against Liverpool, so if Chelsea is playing against Liverpool, you basically have 12 players on both, is it 11 players, sorry, on both sides of the field. I doubt if we can find one person upon the face of the earth that would tell us with precision what team will win, who will score the goal, how he will score the goal, either through a free kick, a header, a penalty, the hand of God, Maradona style, or whatever, a bicycle kick, what time the person will score the goal. And it's very difficult, and I doubt if we'll have one person upon the face of the earth that will do this 3 times back to back, right? Once, it might be coincidental. 2, well, might still be coincidental. 3, then we begin to call him a semi-god. It's not possible, basically. So if you find it difficult to predict what 22 players on the field of the funds will do, it becomes stupidity. So having this mindset that you could actually predict all of the time with precision what price will do will simply wreck your account, right? So if you get to a point where the H4 PC is not there, you're not too sure what price is going to do, even if that pair happens to be your beloved pair, just sit on your hands and wait. Price will eventually tell you what it wants to do, and by then you have the H4 PC sitting up, or you have an AQZ qualifying candle, and then you can take your trade. And even when you do that, you still have to know that that trade could be violated, and then your stop loss comes in to help you. So let's summarize what we've done today, and then I'll go into one more, and then we'll call it a wrap. Of course, we'll check through currency pairs to see if we have anything to trade for today. right? So first, we said high probability setup, you want to see AQZ H4 happening at certain points on our charts, and we spotted the weekly highs and lows as one area where we would like to see this thing happening. So here you have the high, the low of the previous week, and you have your H4 AQZ forming after it has taken the low of the previous week. This is a high probability setup. When it does happen, most of the time, not all of the time, you have explosive moves, right? So here we would have had this feed to the upside, price came straight, and then explosive move, right? Price came straight, and then explosive move. For price didn't really come back to this region. It never did. All right, so that is that for this. Price took out the high of this week, never really gave us anything, and we'll leave it out. Price came, took out the high of this week somewhere here. Again, never really gave us, okay, gave us a H4PC here. So let's say you're trading just off H4PC, then this would have been invalidated. Unfortunately, never really gave us a retest. We'll take that as a losing trade, even though we would have hit TP1 off this area. Price dropped, would have given us our TP1, and then price came back to invalidate our trade. That's that on EU. We quickly check one other pair. CAD CHF. Let's see what happened to CAD CHF. Oh, see a very good example of where what we're talking about fails. So here we have CAD CHF. Price took out the previous week's low, got this. I would have been very, very, very confident of this bullish move, and I would have lost powerfully also. Price came back, and of course, by the time it started shooting up, I'll be like, wow, I got the market this time. And then price melted and took it out. Price came back, and then would have given me TP2, if not 3. Let's see. Price would have given me both ways. Yep, came back, gave me TP1, TP2, basically TP2, right? If you're entering from the tip of the block, then this is TP1, and down here is TP2, and then you're out. Right, so I'll suggest, for the sake of simplicity, pick just maybe not more than 5 pairs you want to sit down with and focus on. It's pretty difficult monitoring everything happening on all the pairs. You get lost at some point, and then you get disillusioned, and even though AQZ is simple, it begins to get difficult for you to follow through with. Right, so here's another example of what I said earlier on. Okay, let's look for another one. Let's look for another one close by. I'm looking for 2 or more AQZ fibs close to each other, and then you can pick the one at the top. Somebody sent a very good example yesterday. Unfortunately, I can't remember that pair. When I have this bullish and this bullish, what I said is I want to focus on the lower one, right? Rather than this, I want to focus on the lower one. There's every likelihood they want to push down this. They violated the lower one, but again, we know they will violate once in a while. But your focus should be on this rather than this. So you'll be trading, you know, at the top and the bottom, the peaks, the troughs, right, of the chart. So let's quickly scan through the chart for today and see if we find anything to trade. I want to assume almost everyone here knows how to take their trade off the 15 minutes. If you don't, please say so. All right, let's quickly scan through. I hope my audio is still on. When you get an invalidation, do you look? Sorry, I didn't get that question. When you get an invalidation, do you look LSB or inside bar AQZ from preferred? I don't really get your question. You could actually unmute yourself and ask, when you get an invalidation, do you, I'm not too sure of what you mean. We have what we call the AQZ zone. If I'm bearish, the lower part here is my sell zone. The middle is my preferred entry, and above is my invalidation, where I look to buy. So if I get a break above, I'll be looking for reasons to buy. Right? Now, but 2 weeks ago, we explained the concept that if you have a bullish or a bearish engulfing, so let's say I have a bearish engulfing, I have a bearish candle, and then I have a bullish candle, something like that. Now, let's say for the sake of this illustration, our PE, preferred entry, happens to be here. What I would usually do is wait for price. Besides just price invalidating, I would love for price to violate. I would love for price to go up and actually violate this region and then close above. Several times price will wick and then come back to close below preferred entry and continue to sell. Right? But if price goes up and closes, we call that a violation. Then upon a retest, I'll have strong reasons to want to buy. So the difference between invalidation and violation. For bearish engulfers and bullish engulfers, I would love a violation to occur to give me good reasons to want to sell or buy. Does it work all of the time? No, it doesn't. If it does, I'll be very rich by now. Right, so let's check the pairs for this week. Somebody say,
sorry, Bishop.
Nice. Yeah, go ahead, please.
Please, can you help us how to take it with the 15 minutes?
How to take it on the 15 minutes? Okay, great, I'll do that. Yep, we have a setup on GChef here. Now this setup looks funny, and I'll explain why. I could use this as my bearish engulfing that has been violated. I can't use this as my inside bar. So fine, we have our H4PC on this, flipped this way. Price has come to invalidate this setup. We will now be looking for sales. When price pushes back to this region, then we'll be looking for sales. That is the setup on GChef as at now. That is set up on GChef. GChef has been ranging. I don't like anything chef. Anything chef, I don't like. But that is set up on GChef. So 15 minutes entry. Yep.
So yeah, quick question. So do you trade that invalidation? So how would you enter? Would you enter the same way for that invalidation on the lower time frame, or you would prefer to wait for a violation of that bearish inside bar before you look for an entry?
Okay, let me repeat your question. Hopefully I got what you meant. If I didn't, just stop me and rephrase. So here we have a bullish setup. In fact, this green arrow for the H4PC would have appeared after this candle closed. So once we see that, we're basically buyers. Now, anywhere within this zone, we would be looking for opportunities to buy. We might have gotten some pips here, but mostly it would have been a a losing trade, depending on how you go in, because price later on came back down. Traditionally, this is the traditional AQZ fib. This is the traditional AQZ fibs. It has this lower part, which we call the stop hunt zones, right? We don't use it so often these days. It has this lower part, which we call the stop hunt zones. So traditionally, you would want your stop loss to be beneath the lowest wick in the price action that created your AQZ zone. So if I were to take this trade, my stop loss might have been beneath this wick here. So meaning that price, my SL might not have been hit as at the time I saw this violation, and then I will, or rather this invalidation, and therefore I will scratch my buy trade and begin to anticipate sells. Now, so entry, if I want to sell, there are two ways to sell, or even three. First one is to basically set your limits and take a walk. And what do I mean by that? Now, price has invalidated. I'm anticipating that price, GCHF, could sell. So what do? I have a sell limit here. Price is already inside this zone. So if price comes back to that sell limit, it drops. I could enter a sell instantly now, right? Two entries. I could have my stops somewhere above. And if price comes, picks my trade, it goes down. If it closes back up, I scratch the trade, and this will call a revalidation. I will now be looking for reasons to go long. I know this could be tough on trader psychology because we don't want invalidations and the like. So in this case, if I'm to get your question right, first way we could take this trade was once it broke beneath, we would have scratched out our initial buy. If we entered off the 4 hours, our stop loss would be somewhere here. If we enter off the 15 minutes, it would have, of course, hit your stop loss already. Then we will resume our sells by having one sell here. Immediately price close, I would have entered the sell traditionally. So it means the first trade will be in a drawdown, anticipating price picking the second trade, and then we sell. If price closes back above this zone, then I scratch my sell trades, meaning I would have lost that trade, and then I anticipate buys. I don't know if that answers the question.
I mean, it does, but more specifically, what I wanted to know is, could you apply structure to actually get in there, or it just makes sense to just either once you get an invalidation, just to have just to enter the way that you're explaining, which is those have a sell limit, or just to enter? I just wanted to know if you could have used structure to enter that invalidation.
Sure, I could use structure to enter, and I'll tell you how. First of all, when I see a H4PC here, by virtue of experience, I know that this H4PC here was respecting this structure. I don't know if you could see that.
Yes.
This is the same thing we have in GA, and I explained GA at the beginning. So this structure, just like we had on GA, was what gave birth to this H4PC, right? So ICT traders will be calling this a proportion block, right? Now, if I use this now as my key area, now remember, this was the reason why we said, if you have two or more bullish H4PCs, you should look for the one at the base, right? Because it will most likely be the originating source, or origination and source is like tautology, right? But it's like the originating drive for the PCs, the other PCs. So having this at the back of my mind, you see how price came to the block entry. I would be anticipating price possibly pushing to the preferred entry before a rally. Now I'm going to do this. I'm going to do this now. So answering your question about using structure, yes, if you are used to structure, I remember at the beginning when we were introducing AQZ to SimplyPips, in fact, we said you could actually use the concept of AQZ for any strategy you trade, including BTMM, right? If you know how to use it. So I'm taking this out. This is my point of interest based on this PC, this AQZ zone, which coincides the lowest point I can see on my chart. This was the H4PC we saw. Price invalidated. I could take a sell and I'll be targeting this zone because I know when price gets here, I anticipate a reaction. Now, if I put my fib like this, both ways, I'm having this region sitting around my TP1. So it's very possible for me to see price trade to my TP1 and then explode, right? So it would have invalidated or violated, no, it would have invalidated this H4PC, but with the hindsight of structure, we see this as the origination for this, or the origin rather, for this PC, right? So if you love price action and you can read it, why not? Why not?
Right.
So yesterday,
Yeah.
does that
Right.
answer
So
your
yes,
question?
yeah, that answers my question. Just one extension I'd want to not exhaust the point. So in that
All right.
same invalidated area, could you
Yep.
have got confirmation from the 15 minutes in terms of structure?
Yeah, right. I'll explain that now. So let's go down to 15 minutes. But before then, let's do this.
Sure.
We have a bullish AQZ. We have our point of interest. And we have our area of interest here. So now I can take the AQZ fib off so the chart looks clean enough. And in fact, take this out, have this on. Great. So let's go down to 15 minutes. So I'm back on 15 minutes. And I want to look for a reason to sell. If we use the normal AQZ rules, once we have an invalidation on the H4, we simply just go in to sell. We just sell instantly. However, if you want to have a different method, we have the 15-minute bank. You basically find it difficult to get a break to bank here. So here I have my 20 EMA. I would anticipate the 20 EMA to play around. I would anticipate price to break above. And when price breaks back beneath, I'm going in for a sell with my stop loss at the high that was created after price broke above my 20, right? Then I'm selling. Now that is one price structure you could use. But traditionally, if traditional structure we use is that on the higher time frame, let's say this was the preferred entry, and price on the 15 minutes was making lower lows into the PE, we would be waiting for price to push back up, taking out this high, then we will draw our AQZ fib and we'll most likely have our PE somewhere around here. We now anticipate price coming back to the PE, then we'll buy. What some people will call an LSB. Now, but when you have a violation, you most times will not have a break the bank to bring you back. Most times, if the violation is too close, you won't have the opportunity to have a break the bank candle. In fact, if you have a break the bank candle, it means on most occasions that it revalidated, then invalidated again. So two ways to take it, you simply take your sell straight up, or I use my 20 EMA, price closes above, comes back beneath, and I take a sell. The high that was created above the 20 becomes where I have my SL, and I simply just take the trade downwards. I don't know if that answers your question.
Thanks much, Prof. That does answer my question. Thanks.
Yeah, because and I appreciate the fact that you asked that question. It simply means you've actually tried this in live, and you saw that sometimes it could be difficult to get break the bank when you get an invalidation. Sometimes you might not just get to break the bank to take your trade, right?
Right. It would more be like a violation.
Yeah. So I'm going to explain two more things and we'll call it a wrap, except you have questions to ask. All right, so for 15 minutes,
hello, sir.
Ask your question, please.
Yeah, sir. I want to ask with the hello.
Okay, I can hear you now.
Okay. Yeah, the question is this: for BTB, do you still use the same take profit, the same what region take profit for from the H4 for your 15 minutes?
For your 15 minutes. All right. Okay. I'll come back to 15 minutes, but I'll answer your question now. That depends on your trade plan. You see, when I started trading some years back, I used to be proud about the number of pips I make. So when people post 10 pips profit, I basically laugh at them like, how can you sit down and all day just to get 10 pips? Right? When you could actually go for 150 pips. Sorry. The call seems to be coming in, disturbing. Sorry, call came in. And I was using my mobile for audio. All right. So I used to wonder, why would you go for 10 pips as against 120? But the market taught me some lessons. The market doesn't care 10 pips or 20 pips. What matters is how your equity grows, right? So if you mark your H4, if you have an AQZ fib, for instance, let's do this. Let's do this here. If this happens to be my H4, this happens to be my TP1 on H4, this happens to be my TP2 on H4. If my entry is on 15 minutes, there's every likelihood that my stop loss will be lower on 15 minutes. Every likelihood. It doesn't happen all of the time. Sometimes they are almost equal, right? But there's every likelihood that your stop loss will be lower on 15 minutes. What should be paramount in your mind is what you want to take out of that trade, not how deep or how high price action went, because you can't control that. What you can control is your risk, right? So I know most of us here will be aiming to trade for FTMO. When you trade for proprietary firms, they don't care if you made 5,000 pips in the month. What they care for is don't violate our rules as per percentage of losses. And what you should be bothered about is what you can take out of the trade at the end, or out of the account at the end of the trading period. So when you trade, if I find an entry on 15 minutes, I have my H4 exits there on the chart, but that might not really be where I'll exit. I'll most likely exit on my 15 minutes take profits. So let's have an example before I go to the Excel to explain what I want to explain. So let's look for an example on H4. Let's take an example of AUD card that we traded yesterday. Clean this up. All right, so here we are. Even though if you traded AUD card yesterday on 15 minutes, you practically wouldn't be able to get in because it was a news-related entry. You wouldn't have been able to get in, but nevertheless, let's use this as an example. So we had this bearish PC. On the H4, we would have our TP1 here, TP2 here, and TP3 right here. In fact, we have TP4 somewhere down here. Traditionally, I won't be anticipating TP4. Why? Because I see another H4 qualifying candle here, and there's every likelihood that price would react at this point. And even if it will break it down, I would want to harvest something out of here. I'm not in the business of guessing that price is going to pierce through this place. Yes, it might, but this is a H4 qualifying candle. Either you're looking at the inside bar, at the bearish engulfing, or you're looking at the inside bar, right? And this is a strong zone. When price gets to this region, you want to harvest something. And that's exactly what price did right here. It came down, created a lower high, and now maybe going down to create a lower low. Now, on the H4, these are my exit points. Now, let's go back to 15 minutes. With this region here, this candle close was what created the H4 PC. So anything from here becomes our point of interest. We're dropping down to 15 minutes. Now, on 15 minutes, my traditional entry on 15 minutes using beat the bank would have been this. So price was creating higher highs. To go back for the retest, this was the last bearish candle responsible for this high. When price closes beneath that bearish candle, we would traditionally have had our entry. But unfortunately, if you use BTB, you wouldn't have caught this trade at all. But let's use the BTB concept. So I'll draw my fib from that top to this bottom. Now, my 15 minutes take profits are here. My 15 minutes take profit, I'm going to use black for them. That's TP1, TP2, TP3, right? So I'll take off my H4 now. You'd notice that I hit my 15 minutes TP faster than the H4, right? This is even very, very close. Sometimes the 15 minutes TP will be just before your TP2 on H4, meaning that you would have been out of that trade long ago, right? You would have been saved this massive pullback that occurred, right, before price started coming back down. You would have been saved the whole of that stuff if you took your take profits from 15 minutes, right? And I believe you all know already that you shouldn't use arbitrary lot sizes. You should never use arbitrary lot sizes. If I were to trade off the 15 minutes, my stop loss would have been, let's say I'm getting in from here, for instance, no. Let's say we're waiting for price to get to the preferred entry. So my stop loss on the 15 minutes would have been like 17, 18 pips. So I'll come here. Never use arbitrary stop loss. It will skew. I'll come here and use AUD card. My account size 50,000, or let's use 1,000. Risk reward ratio 1% per account. Stop loss on AUD card 20 pips. And I'll calculate. If I lose this trade, I'm going to lose $10. The lot size I'm allowed to use is 0.06. If I go 3 times in my direction, I'll win 3 times 10, which will be $30. If I trade off the H4, my stop loss would most likely have been maybe from somewhere around here. If I'm trading off the higher time frame, now I am forced to use a lot size of 0.02. I never round up, I round down. I don't round up. If it's 0.028, I use 0.02. So I would have been using 0.02, right? It means I need to move for a longer distance to make $30 because I'm using a smaller lot size. But on 15 minutes, I'm using a bigger lot size, and price just needs to go some few pips, and I would have hit my $30 and I'm out. So if your entry is going to be on 15 minutes, it's futile to try to chase 200 pips if 60 pips will give you what you want. Take your 60 pips and take a walk. It's useless trying to prove to the whole world that you just caught 1 million pips. So what? What does it do to you? Take your own and get out. And I'll show you guys, I've said this before, but I'm going to use it again so you guys can see the templates I use for trading this system. It basically takes off the burden off you, right? It takes the burden off you. You don't need to kill yourself trying to catch several pips, right? So I call this the asymmetric risk reward compounding system, and we use a 2-step rinse and repeat process, right? So today is Thursday, but some of us are done trading for the week. Why? This is the system that we use. A asymmetric risk reward compounding system, and we use a 2-step rinse and repeat process. So for every trade, you now try to find a clean entry either on H4 or 30 minutes or M15, depending on whichever suits you. You are looking for a trade that can potentially give you a 1:3 risk to reward ratio. 1 part is to 3 parts. So if you are risking 0.5% of your account for every trade, you should be aiming for 1.5% reward. And if you are risking 1%, you should be aiming for 3% reward. When that has been done, let's say you won the first one for 1:3, Traditionally, most traders will come back to risk 1% for the next trade. In this method, we would add the 3 you just won now to the 1 you traditionally would have used before. So you add 3 to this, and now your next trade, you'll be risking 4% for potential 12. 4 times 3, 12. If I win this trade, I will be 15% up. And so after 2 trades, I have passed my FTMO. But if I lose this trade, I would have lost 4%, and now my account will be down -1 because I had 3% winner the first time, and I'm having -4% loser the second time. My account is just down -1. If I win twice, I will rinse and repeat. I'll repeat this process again. And I think I've done this a couple of times with us. So here we have a randomizer. I'm risking 1% the first time. The outcome here, 1 is for win, 2 is for a losing trade. If I win the trade, the implication is that I'll win 3%. My account will grow by 3%. If I take the second trade, now I'll be taking the second trade with 4% of 4 parts, right? 4 parts. If I'm risking 0.5, then now I'll now be risking 2%. So I'll be risking with 4 parts my traditional risk. If I win outcome 1, then it means I would have won 12%. My account is now up by 15%. Once I do this twice, I go back to start again from 1. And if I lose, I'll have -1, and my account will grow by 14%. When you have this at the back of your mind and you trade this way, you would understand why AQZ and the methods we choose to teach makes trading easy, because even when you have a violation, you could have an invalidation, just have a structured way of getting in. So I love the question that brother asked about how to get in on 15 minutes. Have a structured way of getting in. Now, Mark Douglas usually talks about 25 trade samples. So we have 25 trade samples here. If I win 12 times out of 25 times, it simply means I have a 48% win rate. It simply means I have a 48% win rate. And most traders having a 48% win rate will call the strategy useless. But when you use an asymmetric risk-reward compounding method, your account after 25 trades will be up 44%. And you are not taking too heavy a risk. If I randomize this again, and you have 10 winning trades out of 25 trades, a abysmal 40%, your account is still up 24%, even though you had 10 back-to-back losses. 10 back-to-back losses. So you see why I'm high on psychology, because let's be sincere. Let's take a poll here. If you trade a trading strategy and you have 6 back-to-back losses, would you trade the same strategy on the 7th trade? Put a yes in the chat box or a no for I will take a walk. If you have 6 back-to-back losses, would you take your 7th trade using that same strategy? Would you take the 7th trade using that same strategy? The answer is a resounding no every time I take this poll, right? That is why people keep jumping from one strategy to the other, because you feel the next strategy is going to help you from losing. Unfortunately, there is no strategy that will stop you from losing. But AQZ and, is the other things around it gives you, that type of confidence that I could take 2 or 3 losing trades and I'll eventually be in there when the winner comes, most likely. So here we have 10 back-to-back losses on the heels of 2 back-to-back losses that came up earlier, and your account after 25 trades is still up 24%, I tell you, if you can grow your account by 1% in a week, many traders will worship you. I tell you the truth. 1% a week is very difficult for many traders. So 24%, powerful, right? Let's randomize this 3 more times. So the first time again, I'm randomizing it. Now this is assuming that your outcome of your trades are random. And in real life, the outcome of your trade is actually random. Even if you check for divergence, then you look for convergence, then you look for any other thing. If the trade is going to hit an SL, it will straight away hit an SL. Nothing would have stopped you from hitting an SL on AUD card yesterday when the card news came out if you were bullish. No divergence would have stopped you from hitting a stop loss if you were bullish on AUD card. Nothing should have even been faster on GC. Right? So you had 4 losing trades back to back. In the first 5 trades you took, your first one was a winner, and the remaining 4 were losers, validations, invalidations. And after 25 trades of using this method, the highest drawdown you had on your account was a -4, right about here, right? But you ended up growing your account by 37% after 25 iterations, right? Let's see if we can get a very Bismarck performance here. Yeah, in this case, you had 18%. This was a very good month for you, or a very good quarter for you. You had 72% win rate, and you grew your account by 80%. Your account never saw a drawdown. Maybe at the first trade, when you took it, went into drawdown before coming to profit, you were climbing all the way up to 80%. Last iteration, you had you won 16 trades out of 25 trades, a 64% win rate, and your account had a maximum negative of -4, and your account grew by 67%. So you see why people like Papa Pips keeps crushing and crushing the market, because he focuses mainly on gold. And it's very difficult to be taking multiple trades on gold, right? You take it 1 trade after the other, 1 trade after the other. So imagine if you take your trades 1 after the other, or at most 2 trades on 2 pairs running simultaneously, and you run this system, you could effectively take just 3 or 4 trades in a week and you are okay. Then you come back again and repeat again, or 5 trades in a week. Then in 5 weeks of 25 trades, you're up 69% in your account. Powerful, right? All right, so let's call it a wrap. Else we could keep talking like this. Next Thursday is another time. 15 minutes, we have the Beat the Bank, and you have the 20 EMA for those of you who wouldn't want to be using. I think the Beat the Bank indicator is not free yet. Doug will tell us when we should be able to have that. I know we have momentum shift and H4PC for everyone, but the Beat the Bank sent alerts, right? So I'm sure we'll have that for the house later on. For now, you could manually trade it or just use your 15 minutes this moving average one entry. So let's take, you say once we hit 2K members, right? So once we hit 2K members, we could have I don't know why we find it difficult to hit 2K really. If you guys are getting value, invite your friends to join us here. Invite them to join us, and let's do this together. So I guess we can call it a wrap. I wanted to go down to 15 minutes, but I think we'll run out of time trying to explain this, and we can't finish everything in one day. So let's continue discussion on Telegram, and next Thursday will be another time to do this again. See if we can catch any trade. Aha, I think I have an example I might want to wrap up with here. So here we have EN. Here we have EN. Notice we have a H4PC here, and we have a H4PC down here. If you take my advice, You shouldn't look at this H4PC. You should, however, be looking at this. This is lower, and the rule is simple: buy low, sell high. For a sell H4PC, look for the highest one, if they're in close proximity. For a H4 bullish PC, look for the lowest one if they're in close proximity, right? You just save yourself a lot of trouble, even though we know with the asymmetric compounding, we could still be profitable, but you still want to reduce the length of time you spend in drawdown, right? So here you have this. I would rather mark up this zone guys came, played around, and then rallied. Now let's go down to 15 minutes to find our entry at these points. Now, using the 15 minutes moving average I just explained. So I'm going to put my box here, and this is my zone. I'm going to take off this H4PC, right? So this is my zone. I had one entry, second entry, and price came back. So pretty much from this area, we started looking for reasons to buy from 3 p.m. UTC plus 2, 20th of April. So let's go down to 15 minutes. 15 minutes, 20th of April. Let's see, right? So this is what we're talking about, right? This is what we're talking about. So price came back based on what I just explained, where is going to be my entry zone. Price broke above the 15, boom, I'm entering from that point. I'm entering from here now, right? Stop loss below, and I go. So let's see. I'm entering from here to this point, right? So I have my TP1, price came back again. So if you miss this entry, you had another entry, and this time is going to be from here to this point, right? So we have two zones overlapped, right? If you enter from the first one, you've still been in the trade. TP1, TP2, played around, TP3, never really got there. Then if you enter from this point again, you have your trades going that way, right? So that's how you frame up your trades. And you could also frame up your trade using BTB. So let's use BTB. Beat the bank. This is the last bullish candle responsible for this lowest point. So we feed from that lowest point to that bullish candle. So when price broke above, we would be anticipating price coming back and then price shot up, right? So now if I'm entering from preferred entry, it's sweeter, right? Because now my entry is from this region here. I'm going long from this region here. My stop loss is beneath, and I'm going to do a 1:3. So at this point already, I would have hit my 1:3. Enter from BTB, 1:3, I'm done. You're done for that particular pair. And you could just as well be done for this particular pair for this week. And you could be done from as early as Tuesday or Wednesday and let it be. Right? So ladies and gentlemen, thank you. Yeah, 20 Emma. Have a nice day. Bye-bye. Yeah, and when Doc comes online, he'll grant you access, no problem.